How's it going, everyone? It's Sam. I want to talk to you about one of the best price SPACs that we've seen in a very long time. It's a cash flow positive space company that has been merging and acquiring various companies in their space. It's actually valued really well, and I'll compare it to some other space companies. It's a company that I've invested pretty heavily in over the last day. It's still sitting under $11, and I want to explain to you what it is, what they do, and why I think it's actually staying at a pretty low level, why it's being valued at a pretty low level right now compared to some of the other space companies we've seen over the last year, even though it's already EBITDA positive. So the company we're talking about today is Redwire, and they just announced their SPAC yesterday. Now, if you guys like this, before we get started, if you guys don't mind just hitting the like button, I really appreciate that. Also, there is a link down there to BlockFi in case you want an interest rate on your cryptocurrency. And if you want to see when I buy companies just like this, we're already up about 5% on the shares that we bought initially. You can check out the link down below to my Patreon. There you can see exactly what I buy and sell. And you get to join a community of about 4,000 other people, talk back and forth with them on different investments. So, Genesis Park Acquisition Corp is the ticker today. It's GNPK. Now, I'm just going to read you through some of the big picture on this company, and then we'll get into the investor presentation. Again, they do a lot of different things, so you're going to want to pay attention through to the end, and then we'll compare it to some other companies. So, Redwire was created back in June 2020 by combining two space companies, Adcool Space and Deep Space Systems. Redwire has since gone and acquired several other companies, including space manufacturing company Made in Space, so they actually make their products in space, structures companies LoadPath and Rocore, engineering firm Oakman Aerospace, and most recently Deployable Space Systems, a developer of spacecraft structures and solar arrays. So these acquisitions have turned Redwire into a major supplier of the space industry with over $100 million in revenue just last year. Many people believe that the next decade of space is a gold rush. In that context, Redwire is providing the highly specialized picks and shovels required for the space industry. So what makes this company really interesting is that they actually are already producing large revenues. They have $119 million in revenue in 2020, and then they also have an EBITDA of about $13 million. Let's take a look at what they actually do here. So they are a pure play space infrastructure company providing critical technologies and services. They say that they're really the market leader in critical technologies such as space, 3D printing, manufacturing, and robotic assembly. They have, again, a pretty interesting combination of actually high revenue and positive EBITDA this year already. They have a pro forma enterprise value of $615 million. This is really low. It's gotten some people thinking, okay, why is it so low? Why is this such a low number? And we'll compare it to some others here towards the end, but why is it so low? The reason I think this is happening is because we're seeing a lot of SPACs that are right around net asset value. A lot of companies, some companies actually going under $10, which if you know about SPACs, you realize that these shareholders of the SPAC can call up and get the net asset value from the brokerages, and then the SPAC merger might actually complete, which is a long time for people just to have their money sitting there. A lot of pipe investors are pissed off. The original investors are pissed off because they can't actually get the SPAC to go through, so it kind of wastes a lot of time. So companies are being forced to decrease the amount of their valuation to actually have a decent valuation on them. This $170 million in cash to the balance sheet is supposed to help them with strategic investments and mergers and acquisitions. So that is going to be something that they've done before. This is something that they have been very prone to do because they have 7 companies that they brought under one roof. So Genesis Park, the SPAC company they're merging with, already has strong relationships with key stakeholders such as NASA, the U.S. Air Force, and U.S. Space Force. Between their management team, they have $70 billion worth of executed mergers and acquisitions. So you can see they actually have a lot of experience there. And you can see some of the companies that they've worked for here. So the COO is actually the chair of NASA Advisory Council Regulatory and Policy Committee. So you can see some of the different things that they do here. Again, they're an infrastructure solution. So they have space-capable robotics, microgravity additive manufacturing facilities, solar arrays and antennas, integrated next-gen spacecrafts, advanced in-space camera systems, and spacecraft sensors and components. One of the things that I find really interesting is the in-space manufacturing and robotic assembly. So someone from NASA has publicly said if NASA can print things in 3 dimensions in space and then robotically assemble those things, those capabilities are going to be absolutely game-changing for NASA and for our partners in the US government and commercial industry. There is a problem where satellites are being engineered for launch first and the actual mission capability second. So right now they're being manufactured in a way where they have to be folded, they have to be put in a certain confinement so that they can actually be launched into space, and they have to be protected because some of the parts are very fragile. While what Redwire is doing is actually launching raw materials and then manufacturing these materials in space, and they're already going to do this for NASA. And someone else that they're doing, which I hadn't really thought about, is they're actually helping preserve and keep safe and monitor different small satellites. So this is something that I hadn't really considered because they outline here that the number of satellites being launched is exploding, and monitoring, controlling, and securing against physical and cyber threats is critical. Space is now a contested warfare domain with adversaries investing heavily in offensive and defensive capabilities. So what they're going to do is they're going to provide a range of monitoring using space-based optical interferometry without exceeding civil, commercial, or DoD/IC satellite mission budgets. So they are going to actually monitor a lot of the other satellites in space. Here they explain how Arcanauts win validates Redwire's position as a market leader in space manufacturing. So Redwire is the prime on Arcanaut 1, the first on-orbit demonstration using additive manufacturing to build and assemble complex components in space. So this is a $74 million contract value. This is planned in 2023. So they will 3D print this 33-foot beam right here. So this is going to be interesting, possible catalyst for them in 2023, which is only 2 years away. And then they've also had a lot of momentum from recently won contracts. So they have 70 million plus in recent wins. So they're saying this is as of December 2020. I don't know if this is just in December 2020 that they have all these recent wins. I think it's more like they're saying that this is as of December 2020, but I could be wrong. So they already work with NASA. They also are able to provide Momentus with high value to deploy our near-term missions with opportunities for continued collaboration. So they're working with Momentus, they're working with NASA. But this is where it gets really interesting. They have a pro forma equity value of just under $700 million. Now, they're sitting at about $11 right now, so this has increased a little bit, but still, you're talking about a company that's maybe $750,000, and they're already EBITDA positive. So you can see their adjusted EBITDA is $13 million. They're expecting to increase this about 50% or so this year, and then another 50%, and then 100%, 100%, 100%. So they're expecting this to accelerate as space continues to win and get more and more money thrown at it. As the sector keeps on growing, you can see how the revenues are going to increase too. The interesting thing about this is you're talking about a forward price to earnings 5 years out of about 3. So compared to a lot of these other space companies that don't even have positive EBITDA until 2025, or maybe some of them don't even have revenue until 2024, 2025. This company looks pretty cheap comparatively. Now, their growth is expected to continue in that 30 to 40% range over the next couple of years, and then it's expected to grow pretty exponentially. They're expecting margin to improve too, just from growth, from being able to take all these different components of their business, put it under one roof, whether that is talking about IT, whether that's talking about HR, all that kind of stuff, and just being able to increase the manufacturing capabilities while they get more and more business. That's something that they're going to improve on also. So when we look at this compared to some other companies, this looks really attractive. So compare it to Archer. Archer is a company that I held. I actually sold it to buy more of GNPK, but this has a pro forma equity value that is about 5 to 6 times what Redwire is right now. So this, if you don't know, they're an EV toll company, but this was announced a little while ago, and they really aren't expecting revenue until 2024. And then they're not going to be free cash flow until 2026. So this is a high risk play because you're talking about an EV helicopter company essentially that is very far away from actually having a product. And then you have this other company that's already cash flow positive. If you compare it to another company, Momentus is assuming positive cash flow in 2023. If we compare it to something like Virgin Galactic is burning $71 million a quarter. So Redwire compared to these companies is much cheaper. It's actually at a good valuation. It's positive already. They're focused on mergers and acquisitions. This was not including, like, their projections are not including future acquisitions either, which is really interesting. So that's just something to consider. This company is, I think, a game-changing company compared to some of these other companies that are really hype-based. And I'll be honest, like, I've been buying some of these companies. We were in a very different environment a couple months ago than we are now. But this company is still in the space sector, and it's actually profitable at this point. So let me know what you guys think about Redwire. Let me know if this is a company that you like. Let me know if it's a company that you're going to buy. Let me know what you like about it, what you don't like about it. Maybe there's something that I'm missing. Let me know. If you guys want, you can check out those links down below to BlockFi and to WeBull to get some free stocks, and to my Patreon to get information like this a little bit earlier. Thank you, and I will see you in the next video. Bye.